Okay, so hi, my name is Brighid and I head up partnerships at Agora. We are a stablecoin issuer of AUSD as well as white label stablecoins. And I am super excited to be hosting today's panel on trust, regulation and interoperability, specifically with stablecoins with today's fantastic panelists. I think 2025 into what has been like the first half of 2026 has been potentially like the year of the stablecoin entering into like firm regulation. And so, yeah, it'd be super exciting if everyone could give a quick intro. Should we start?
Sure. So, hi everybody, my name is Vit. I'm from Austria. I'm representing today Qivalis. We're a consortium of European banks that is planning to build a Euro stablecoin.
Hi everyone, my name is Adrien Stern. I'm the founder and CEO of Reveel, and we're building global peer-to-peer payments, specifically a global directory and data layer that allows us to fully abstract the fragmentation of different stablecoins on different networks.
Hey guys, David here, founder of Inception Capital. We do early stage investing and also fund of fund into emerging managers.
Okay, fantastic. So I feel like all three panelists have very different sort of vantage points when it comes to stablecoins and different sort of building in different directions. And so I think what would be really interesting to kick off with would be, given that sort of like Genius has passed, Mika is being rolled out in Europe, like how would you guys say that stablecoin regulation has materially changed for issuers and for institutions in the last year versus like what's just pure marketing?
I mean, from European perspective, and Mika was passed a while ago, we have seen significant uptick of Euro stablecoins, so more than 100% more Euro stablecoin volumes have been achieved since Mika was passed. However, still in relatively to the global stablecoin market, Euro still represents a very small portion of that. I think what's also important to say is that what we need, and this is my kind of me speaking from my traditional banking background, is that legal clarity is super important. And this was the first step with Mika. I think that even if we don't like some paragraphs in Mika and we don't maybe agree with everything, at the end of the day, still regulatory clarity drives institutional adoption. And this is something that we're seeing with our shareholder banks. Currently, we have 12 on the cap table. And all of them are very excited to build stablecoin products and services due to this regulatory clarity, which drives institutional adoption.
I'll just add that I think the clarity is super helpful, and on the issuance side, we're definitely making some great strides. I think there's still a lot that needs to be figured out at the transaction level, at the infrastructure level, custody level, et cetera. So we still have ways to go, but anecdotally, friends who work in banks, a year ago would not want to touch stablecoins because they were afraid that, they might get fired for trying something that wasn't very clear by regulators. Whereas today, everyone's trying to get into stablecoins because they know that's the future and that's how they're going to get promotions. So there's been a drastic change within organizations around how they, how folks are interested in the space as well.
Yeah, I think ultimately everyone looks to the US as to how stablecoins can shape the future of how financial markets can be run. And I think as sort of the US got more comfortable, a lot of the sort of emerging markets start to follow on. And I think that's a big proponent of what we're seeing now. It's with sort of the US sort of leading the way, and a lot of the institutional a lot of the institutions starting to get into the space and starting to adopt stablecoins. I think that really made headwinds for some of these emerging markets and some of the use cases to be done there to really modernize the way that people are doing the transactions, especially at the cross-border scale.
Do you have one specific geography where you're like, oh, this is the gold standard today? Like I would say that this is the leader when it comes to regulation.
Well, I think it's still the U.S., right? Everyone still looks to the U.S., but obviously, other jurisdictions like the U.K. or even I think Mexico is trying to follow very closely to what the U.S. is doing. other emerging countries, which I think is really interesting, that really needs a more stable currencies like Argentina and Turkey, and even Colombia, which had actually you can buy Bitcoin for 3% lower than market price just because of like the market volatilities there. Also have a really good sort of way that they're able to stabilize the economy and you have a better sort of way to transact.
Yeah, no, that's really interesting.
Yeah, so I would actually say that it's MiCA and it's Europe, because MiCA was the first, actually, the
Sure.
first regulatory piece that was passed. And what's interesting, actually, that we started with this in Europe years ago. And of course, these processes take a long time. And I think that MiCA also kind of became the blueprint for all the regulatory pieces around the globe. Because I don't think there are many differences. Of course, there are some local changes or local specificities, but on the other side, I think still MiCA is kind of the blueprint and was one of the first ones. Interestingly enough, then I think that the US moved very fast and kind of in 1 year made more improvement than Europe did in the last 5 years.
I think it's like a lot of times it's not necessarily like who goes first, right? It's the one that is most impactful that kind of just encourages everyone else to follow suit. And US has always been kind of like, for not only just stablecoin adoption, but like I think just general sort of financial market regulations, I think most people to follow what sort of the US sets as gold standard. And the US has been terrible about this for most of their history in the financial markets, but finally they got something right. And like, I think ultimately, over time, regulation ultimately, will then follow suit to innovation, especially in the financial markets, which is so delicate and you don't really want anything that kind of is out there that allows people to sort of fit in the gray area. So I think it's also a very tricky situation to navigate, but I'm glad that US is really taking a leap into really looking into this and looking for ways to have better regulations come up. But definitely I don't think US was the first in many of the regulations out there.
I think there's one more regulator to keep an eye out on because they are quite proactive, and that's Brazil, the central bank of Brazil, and they've recently made some rules specifically around foreign exchange, but clarifying what are the routes for using stablecoins in FX and remittance flows, etc. So I think that's a regulator to keep an eye on.
Okay, interesting. One thing that I would like to ask a little bit more on was you mentioned that stablecoins, sort of on the issuance side, have very clear regulation, but there's lots of other components of stablecoins that are maybe not yet touched by clear regulation or regulation that's clear enough. And so what would be on your wish list?
Well, I mean, for instance, there are places where folks cannot be paid their salaries in stablecoins. Like that's not compliant. You've got some FX flows, and so Brazil is an example of setting the rules on how do you use stablecoins for FX flows, and they've basically said you have to funnel it through their local version of VASP, which I think is PSAV or something like that. So those are the types of sort of regulations that we need beyond just how do you issue a stablecoin in a compliant way.
Like what should the backing be, etc. Okay, got it. But Qivalis, multi-bank consortium issuance, MiCA compliant Euro stablecoin, and what are some of the challenges, if you could walk us through, that you guys face when you're sort of looking at issuance from that perspective?
Yeah, so actually we started 3 years ago with a banking project where 4 banks joined forces and asked themselves a simple question. Would it make sense to join forces and issue one Euro stablecoin? We didn't want to fragment the market even more because we think still that we have the power and we have also the know-how and the institutional trust that we can bring to the market. 3 years ago, when we started, the situation was very much different. So in the banks, nobody really talked about stablecoins. We were still seen as kind of the innovators. Now things have changed a lot, and one of the biggest challenges that we had was to actually get more banks on board. So we knew that this will only work if we get sufficient banks on board. And I think that now we have reached this number. Currently we're 12 banks and still onboarding more. But building this consortium was extremely hard. So this was one of the this was one of the biggest challenges. And then, just let me finish this thought, and then connected to this also setting up the governance structures. Because we have seen that this banking consortia in the past have failed already because they have not been sufficiently independent, or they had some other issues. So we designed Qivalis to be an independent entity that's not kind of steered by these banks, and when it comes to the choice of partners, choice of blockchain, and also other kind of more strategic choices, we have this independence. So this is one of the most important things that we or most important challenges that we needed to solve.
Got it. Do you think that a consortium issuance could work in other geographies? Like, do you think that Qivalis is like almost like a case study?
I think it could work, and we have seen some attempts already. I think there's one in Japan, there's one in Korea. So we're also looking at these partnerships, because at the end of the day, we focus on the Euro stablecoin, and we do want to find reliable partners also in other currencies.
Yeah, that makes sense. Adrien, your bet, I guess, is on infrastructure tying together stablecoins issued by many different parties. And so would you view the future as sort of like mega issuers, like mega stablecoin issuers, like a handful, like 2 to 3, or do you envision that it's sort of many different sort of stablecoins issued by many different people, which are all sort of connected through a routing like layer?
I think it's both.
Okay.
I think we're gonna have a typical like Pareto distribution, right, with a handful of stablecoins that represent, huge amount of the market cap, and then a long tail. I think that fragmentation is going to be there. When you custody funds, why not have your stablecoins and be able to generate some yield, or your tokenized deposits, or whatever that is? At the same time, liquidity is critical, and so you probably will need some, massive mega stablecoins, as you're calling it, with really deep liquidity. And then the question is, how do you facilitate the interoperability? Is it going through one of those mega stablecoins when you're transacting from stablecoin A to stablecoin B, or are there bilateral agreements between certain stablecoins to facilitate transactions, or are we finding the optimal liquidity route via a variety of different stablecoins to get from point A to point B? I think that's still to be determined, but in my mind, we're definitely going to be in a fragmented space, and the orchestration layer is going to be critical to facilitate transactions between different institutions that have different stablecoins, and obviously you want to hold theirs. Today, let's say you're generating even just 4% APY, holding stablecoins for 1 day, that's pretty much 1 basis point, right? And so you want to optimize holding your own stablecoin as often and as long as you can.
But would Qivalis use Reveel, or would you guys have another solution for like the routing?
So we haven't talked yet.
No, but we're about to make a deal here on stage.
Okay, fantastic. And thoughts on white labeled stablecoins? Like too fragmentationary, or?
No, I think at least in this current phase, it makes a lot of sense. You've got companies that have built the infrastructure to be able to, deploy these white label stablecoins very easily. How that looks like down the road, I don't know. Might still be useful for smaller businesses that won't ever really have that infrastructure. I think for bigger financial institutions, I don't necessarily see that as an offering that makes a whole lot of sense. They'll probably want to own that stack. But for businesses that are not in the financial industry, perhaps that's going to be a viable. I'd love to hear your take on it from an investor perspective.
I mean, I think it's like any like white label service, it never really comes into the same effect as if you're able to really control the whole sort of issuance process. So like, I think when we look at investments as a whole, like there's really not anything that within sort of the stable core like financial infrastructure side of things that's ever white label that has really gone massive scale. But I think it's like a good way for it to build some momentum and traction. Obviously, these things exist for a reason because we want to sort of really build momentum and want to do it very quickly. And there's too many, sort of there's regulatory or licensing or like all those sorts of other hurdles that kind of blocks you from getting to sort of that inflection point as quickly as possible. But they're definitely useful, but I wouldn't say that they're necessarily good in terms of a investment perspective.
Got it. Stablecoins are used across a variety of different use cases, so payroll, treasury management, collateral in DeFi, collateral in sort of on-chain capital markets, treasury management. But where would you guys say today that regulation is not keeping pace, so it's falling behind and it's not adequate?
I mean, I'm gonna circle back to my previous example. I think specifically around FX, there's still some clarity there to be had. I think for remittances, stablecoins are a great solution. We just need to make sure there's clarity in terms of how we can move in and out of different currencies.
So from European perspective, especially when it comes to tokenization of assets, we still see that a lot of things need to happen before this space scales. So it's on one side regulation, how to tokenize a bond, how to tokenize equities, funds. So a lot of these things are also locally regulated, so very specific to single countries in Europe. And I think that only when we build a whole ecosystem there, stablecoins can actually also scale and help to settle this asset. So I think that the whole ecosystem is not built yet, actually.
Are there like areas where you would avoid, as like on from the investment side, David, due to regulation?
Yeah, I mean, I think all the things that you mentioned about stablecoins are just use cases for money in general, right? Like, whether it's like payroll or like treasury management or, remittances, all of these things, they're all just like how we kind of can facilitate like financial value from one aspect to another. It's just done in a much more efficient way than it was done before, right? But like the inherent sort of backing behind that is just some type of monetary currency, whether it's USD or any other forms of currency. But I think ultimately for us to get to the scale that we want, it just has to be a more consistent sort of regulatory framework so that it's not only just one country having these set of rules, it has to be kind of be able to sort of collaborate and coexist with the other rules that other jurisdictions have put in place. So right now, just getting everyone sort of on the same page and so that money can flow as fluidly as possible across all sorts of jurisdictions without risking, some of the, like, I think a lot of it work is done on the anti-money laundering side, and like, obviously that side of it is actually very important, but like, with sort of actually stablecoins and things beyond chain, actually things can be actually a lot more transparent than they were before. So I think with that, like, anti-money laundering aside, a lot of the things should just really promote for as much actually stablecoin adoption as much as possible, and just whatever sort of size that fits in within those jurisdictions that can come together and collaborate.
Absolutely, that's a great point. And I think another example of that would be on yield. I feel like it's impossible to talk about stablecoins without talking about yield. Everybody is looking for yield, but it seems like the regulators have decided that stablecoins are more for like payments rather than sort of investment products. But then you have tokenized treasuries, tokenized T-bills, and vaults. So do those, like, how do you see this? How would you guys see this like resolving, like the appetite for yield, but then regulation that's sort of a little bit constrictive there?
Yeah, so in Europe, again, MiCA also forbids yield on stablecoins, and I think this is for a reason, especially because if we want to differentiate this from tokenized or from deposits or commercial bank money that do pay yield and that are used in production, I think that this is also something that in general Qivalis supports. However, I think that there are many different ways how to provide yield, not directly on stablecoins, but either switching this directly in a tokenized money market fund when the stablecoins are not used, or on the other side also providing the DeFi yield, so creating a pool and making these assets actually more productive. I don't know if you guys have a take on this. Okay.
Got it. That's really interesting. I think we can maybe leave with some predictions or projections for the next 3 years. So would be very curious to hear your thoughts and projections for where interoperability, or like what interoperability will look like in 2030. So like a global stablecoin market, or will it be very fragmented?
So from regulatory perspective, I think that we're seeing now a lot of regulatory pieces kind of specific to single country or region. I think that in the next step we will see some kind of global standards and some kind of harmonization here. Also, what I think will happen is that certain technical standards will be created, coming back to the interoperability. There are also things like stablecoin clearing systems that are starting to appear. So I think that this kind of things, on one side, regulatory harmonization, on the other side also on the technical side, that many things will happen. So I think that we're in a good spot and super exciting times for stablecoins.
Yeah, I would agree with that. I think the regulatory harmonization and the interoperability technology will allow for further fragmentation in terms of issuance. Right now, on platforms like DeFi Llama, you can look up how many stablecoins there are, and there are about 370 something. Less than 12 months ago, that was like around 200. And my bet is that in 3 years, we're going to be past 1,000. Especially as non-USD stablecoins start to really pick up in terms of demand. We'll see more and more issuance there. So I think that's just a trend that's going to continue and accelerate.
Yeah, I think we'll get into an area where there's going to be a lot more automation across currencies, right? I think it's like, a lot of times we're preventing yield or we're preventing, sort of monetary access. It's like, in the future, I feel like 5-10 years from now, like your money is going to start working for you, right? Rather than, you're also always just exercising the labor component of like what you can do physically. I think money itself will be an aspect of like, it will then be able to, help you generate more money, not only from a yield perspective, but also like, paying people to do certain amounts of like work for you on behalf of you. And I think ultimately that will be then in a process where it's not only about interoperability, but it's a lot about automation, also about like how you're able to sort of utilize the money as a whole to actually have productive work being done, right? And like that productive work being done will actually be the yield, right? Rather than, it's just a government deciding that they want to give 4% or not.
Got it. Well, I'm excited to see you guys back in 3 years to see how that pans out. But yeah, thank you very much, everyone.
Thank you.
Thank you.